Hey YouTube, this is the Robinhood Investor. Hope you had a great week of trading. As always, I really appreciate your support. So if you like this video, give it a thumbs up. And if you want to learn about investing, subscribe to this channel. Today I'm going to talk about my Robinhood portfolio, currently at $304,391. Cash position of $1,368. Past couple of weeks, I've been contributing to my account. So you can see 500 every couple of days. So I contribute several thousand. Make sure you stick to the end of the video for positions that I got into recently. Scrolling down a bit, you can take a look at my Ethereum position. I only have one Ethereum in my Robinhood account and more in my Coinbase GDAX account. This makes up 0.54% portfolio or $1,648. I'm up 158% on this position. So Ethereum as well as Bitcoin, I'm bullish on those two cryptocurrencies long term, but short term there's a lot of volatility. And I think with the potential upside, the risk and the volatility is what you pay for. Taking a look at my largest ETF, Vanguard S&P 500 ETF. Very low expense ratio, high liquidity, good exposure to 500 largest US companies. This makes up 5.52% portfolio or $16,741, up 52% on this position. Next is Vanguard Information Technology ETF. This makes up 5.87% portfolio or $17,779, up 176% on this position. This is really good exposure to the tech sector and some of the largest US technology companies. Largest stock position is Apple. They make a lot of consumer electronics like iPhones, MacBooks, iPads, and as more consumers get into the Apple ecosystem, they're also growing in their services business like iCloud and Apple Music, Apple TV, Apple Arcade. This makes up 12.04% portfolio or $36,484. I'm up 308% on this position. And I do believe that there's more potential upside with them getting into the augmented or virtual reality space as well as their car, hopefully electric or smart car in the future. Nvidia, which makes GPU chips, they're also growing in their data center business. This makes up 8.93% portfolio or $27,072. I'm up 301% on this position. Next is Amazon, which is one of the largest e-commerce companies in the US. And they're also growing in their Amazon Web Services. So even though there's a lot of negative news around retail, e-tail, Amazon is better diversified with their cloud computing, Amazon Web Services business, and also they're diversifying into the healthcare sector with their different healthcare services, like their acquisition with One Medical, which gives them exposure to primary care business. And then they also have PillPack, which is their pharmacy business. And they also have a virtual care service. This makes up 7.53% portfolio or $22,808, up 33% on this position. And you can see it surged due to the positive sentiment. Next is Microsoft, which is in the enterprise solution space. So that includes Microsoft Azure, cloud computing, Office 365, Windows, and also they also have also exposed to the gaming business with Xbox, makes up 6.76% portfolio or $20,499, up 213% on this position. Alphabet Class A shares, which has voting rights. Their primary revenue is online advertising. Makes up 3.11% of my portfolio or $9,420. I'm up 129% on this position. Alphabet Class C shares does not have voting rights. Makes up 2.48% portfolio or $7,525. Up 121% on this position. So I think with Alphabet, which is a parent company of Google, even though Alphabet and Meta form a duopoly in terms of dominating the online advertising space. I think Google is better positioned just because there's more positive sentiment, as well as there's less competition relative. So with Facebook, Instagram, there's a lot of competition with TikTok, but with Alphabet or Google, you have Gmail, YouTube, Maps, among other Google products that are very sticky with their users. Visa, which is a payment processing company, makes up 4.46% portfolio, or $13,503. I'm up 77% on this position. Next is United Health, which is in the healthcare insuring space, makes up 3.39% portfolio, or $10,272, up 212% on this position. Johnson & Johnson, which is in healthcare, they have different business segments like consumer health, pharmaceuticals, as well as medical devices. This makes up 3.35% portfolio, or $10,149, up 35% on this position. So even though they don't have as much capital appreciation from growth in their price, but they pay a solid dividend yield, and then they're also very steady in the market. Meta Platforms, which is the parent company of Facebook, Instagram, WhatsApp, and Oculus. There's been a lot of volatility with Meta Platforms. This makes up 3.26% portfolio, or $9,872, down 10% on this position. Make sure you stick to the end of the video for whether I add more to my portfolio. McDonald's, which is in the restaurant, it's an international restaurant chain. Actually, a lot of their revenue comes from real estate as well. This makes up 2.59% portfolio, or $7,860, up 63% on this position. Next is Taiwan Semiconductor Manufacturing Company, TSM. Makes a lot of chips, and as there's higher dependence on hardware technology, TSM benefits from that. This makes up 2.59% portfolio, or $7,838, up 1.59% on this position. Mercado Libre. This makes up 2.63% portfolio, or $7,961, down 10% on this position. And you can see it reported earnings recently, which is why it surged after hours. There's a lot of positive sentiment. And this is in the e-commerce space in Latin America, so that includes Mexico, Brazil, and Argentina. It's an emerging market, so there's a lot of potential upside, but there will be a lot of risk to it. So not only are they in e-commerce, but they also have their payment services. And as more of their market is connected to the internet, I think Mercado Libre will benefit from that. Costco, which is in the membership warehousing retail space, makes up 2.52% portfolio, or $7,622, up 118% on this position. Next is Tencent, which is a big Chinese technology company. They have services in fintech, social media, as well as gaming. This makes up 2.62% portfolio, or $7,926, down 15% on this position. Next is Alibaba, which is an e-commerce company in China. They also have exposure to web services, cloud computing. This makes up 2.27% portfolio, or $6,867, down 43% on this position. So even though I'm down in this position, I don't plan to add any more to my portfolio, but I do plan to continue to hold. Next is Home Depot, which is in the home improvement space. This makes up 1.89% portfolio, or $5,736, up 95% on this position. Berkshire Hathaway, which is Warren Buffett's holding company, and it has exposure to companies like Apple, Bank of America, American Express. This makes up 1.85% portfolio, or $5,595, up 55% on this position. So Berkshire Hathaway doesn't have any dividends. So the thing is, Warren Buffett believes that he would rather reinvest all that into the business rather than pay that out to shareholders. PayPal, which is another fintech company, makes up 1.75% portfolio or $5,305, down 13% on this position. Boeing, which is in the aerospace industry, makes up 1.65% portfolio or $4,998, down 26% on this position. Shopify, which is in the e-commerce industry, makes up 1.48% of portfolio or $4,491, down 52% on this position. So think about different businesses, small, medium, large. If they want to have an online presence, a lot of them use Shopify to have the backbone to the website. CrowdStrike Holdings, which is cybersecurity company, makes up 1.42% portfolio or $4,311, up 26% on this position. Next is Block, which is the parent company of Square, Cash App. This makes up 1.34% portfolio, $4,064, down 47% on this position. Disney, which is a big entertainment company. They have theme parks, as well as a direct-to-consumer streaming platform, Disney Plus, which I believe has a lot of potential upside just because of their intellectual property. This makes up 1.27% of my portfolio, or $3,842, down 1.63%. They have a lot of strong brands that we recognize, such as Star Wars, Marvel, Pixar, Disney, a lot of well-known, recognized brands. Adobe, which is a company that creates solutions in the creative space. This makes up 1.14% portfolio, or $3,466, down 11% on this position. AT&T, which is in the communications services. This makes up 1.13% portfolio, or $3,420, down 46% on this position. So there's a lot of volatility with AT&T, and it's been trending downwards. I might liquidate this position. Next, Era Energy, which is in the energy sector, makes up 1.03% portfolio, or $3,112, up 97% on this position. The Trade Desk, which is online advertising company, makes up 0.49% portfolio, or $1,496, up 41% on this position. Twilio, which is in communication services using web services. This makes up 0.39% portfolio, or $1,100, down 58% on this position. Teladoc Health, which is in the telehealth space. This makes up 0.34% portfolio, or $1,039, down 58% on this position. Baozun, which is a Shopify of China, makes up 0.36% portfolio, or $1,094, down 73% on this position. So that's all for in my portfolio. I'm going to go over what I plan to buy with my cash, as well as I do have $30,000 in a high yield savings account, so I might add more to this portfolio using that. Some companies I plan to add include Amazon, Microsoft, Google, Meta. I'm on the fence on. We'll see what I do with Meta. Taiwan Semiconductor Manufacturing Company, Mercado Libre. With the Chinese tech stocks, I plan to hold but do not plan to add anymore. I might add more to CrowdStrike, Disney, and Adobe. So I do plan to continue to add more to my portfolio and hold my existing position. That's all my portfolio. What are your thoughts on these stocks, and what are you holding? Comment down below. Remember to use my referral links below, and both of us get $20 for using personal capital, or free stock for using Robinhood. If you like this video, give it a thumbs up. And if you want to learn about investing, subscribe to this channel. See you in the next video.